Hi there, my name is Jamal Khan. I'm the Head of Tax and Senior Tax Partner at Churchill Tax Advisors. Today we're discussing a very important topic on capital gains tax and rollover relief. Now, I have the reason I'm discussing this today is because in the last couple of weeks I've had a couple of scenarios, clients who've asked me different questions about rollover relief and the misconceptions that exist in general public about rollover relief. And I need to clarify those because a lot of people are making a lot of mistakes and having problems with HMRC or tax investigations because they simply do not understand what rollover relief is and what the requirements and conditions are. Very important. Generally, the rollover relief concept in landlords is that if I sell a property and if I buy another property, I don't need to pay any tax. This is mostly for residential investment properties. Now that's wrong. That's completely wrong. You need to, if you have an investment property and if you sell it, you need to pay capital gains tax on it. If it's an investment property, rollover relief does not apply to investment properties or residential properties or commercial properties if you've rented them out. Rollover relief only applies to assets or properties where they are being used in a trading business. Very important distinction. So if you have a trade, you're running a superstore, a garage, a trading business, and you're using your property in that, any company which you have a trade, for example, I don't know if you're a consultant, but you use a property in that trade for your manufacturing or whatever, when you sell that building, then you can roll over any gain into another building that you acquire for the same business, okay, for business purposes. So you need to, when you sell an asset that's of a trading nature, not a residential property or investment property or commercial investment property, but a trading property, a trading asset, you need to reinvest the proceeds of that you've received from the initial sale have to be reinvested in entirety in the new asset, new trading asset. So if you, for example, if you sold a property for a trading property where you trade from for £2 million, and the next property that you buy is for £1 million, then the gain will not be fully rolled over. Only half of the gain will be rolled over. The half you need to be paying tax on. So it's very important that you take this into consideration, that it's the proceeds, not the gain, that needs to be reinvested. Some people have a misconception that if the gain is £500,000 on £2 million sale, then they need to reinvest only £500,000. That's incorrect. You need to reinvest the whole of the proceeds. Otherwise, the gain is restricted. The next point is what happens when a gain is rolled over. The gain is deferred. So gain on a property, for example, you sold a property for £2 million. The gain was £500,000, and you reinvested the full £2 million in the next asset, next property. You've gone somewhere else, you've bought another property for your business. Now that gain is deferred and deducted from the acquisition cost. So you bought another property for £2 million. So when you buy that property, in your books, you will need to deduct the £500,000 gain from the acquisition cost of the next property. So the next property in your books will only be £2 million minus £500,000, which is £1.5 million. Very important concept to consider. Now, time period is also very important, where you've got, you can reinvest the gain or the proceeds 1 year before the sale of the original property. So you sold a property today, but you bought a property last year for the business. You can carry back that gain to the previous year, or then you've got 3 years after the date of the sale of the asset. So 1 year before or 3 years after. So within 4 years, you've got to reinvest the proceeds. If you miss this deadline, then you have to pay unless you've had an agreement with HMRC for exceptional circumstances due to the delay. Now, if you've held over a gain in a property, but somebody dies, for example, and any gain held over is delayed, or it vanishes at death. This is also a very important point. So somebody bought a property, sold a property, had a gain of £2 million. It was held over because they reinvested it. But when it comes to death, the held over gain disappears, vanishes. The next point that I make, as I said, in the fund point that I make is very important to consider that there is a class of assets that you can reinvest in. HMRC have already given the guidance on which class of assets you can reinvest in, but you need to if you are planning to roll over a gain, a capital gain, and not pay the capital gains tax, then you need to take advice from a tax specialist who can advise you on the steps. The asset that you buy does not have to be UK. So if we, for example, if some people have misconception that it's UK only, no, it's UK or overseas. Very important. So you can sell an asset in the UK and buy a trading asset, for example, in, I don't know, in Europe or Asia or Africa or America. You can buy an asset anywhere to roll over this gain. Once again, I'll finish by saying that the rollover relief does not apply for residential or investment properties. It only applies to business or trading properties. Thank you very much. If you have any questions, you can contact us on the link below, or you can watch our YouTube videos. We've got several YouTube videos being released every week. I hope you find them. They're all free. Lots of free information for you guys. If you have any comments, you can write your comments, or if you have any questions, you can give us a call. Thank you very much.